Goldman Sachs warning that the Trump rally could soon end, that we have nearly reached maximum optimism. DR, that sounds to me like a negative for the market, and the market's ignoring it.
Well, the market is ignoring it, Stuart, and I think the market's going to keep ignoring it for a while. I have a target of 21,860, and that's due to some technical analysis, but it's also due to some very fundamental analysis of what's going on. After optimism peaks, you get a follow-through effect. So I think we've got a lot more upside room here in the near term.
In the near term, you're looking for another 1,000 points
I am
up.
5 more percent.
We're at 28, you say 21.8.
Yes, sir.
In how many weeks?
One of the keys to forecasting: never give price.
Never give a deadline. Right.
How convenient.
Scott, hold on, Scott Martin, you got to come into this, because I see the Goldman Sachs statement as a negative. I see concern over the border tax and whether we'll get a tax cut deal as a negative, and yet the market's keeping going up. What say you?
I think the Goldman news, Stuart, is great news. I thank you, Goldman Sachs, because remember, when we've had these big market runs, think back in the 90s, think the mid-2000s when we had some of these market experts like Goldman saying, the market's overcooked, it's overdone. Yes, they were right, but the market ran for a couple more years after we had these scary notions. So I think this is going to propel the market higher. The more non-believers we have in the S&P 500, sports fans, the more the S&P is going to go up.
Yeah, we're all jumping on this moving up bandwagon.